Welcome back to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors. We've got Darren Sinden here, market commentator from Admiral Markets. That's Admiral Markets. Darren, how are you, sir?
Yeah, very good, thank you, Moose.
Me and you have been around a long time, and, well, things never cease to amaze me. What appalling weekend it was for the world PLC.
Yes, dreadful events in Paris. People out trying to enjoy themselves at various events and, turned their whole evening and some people's lives finished and other people's lives turned into a total nightmare. So, obviously sympathies with the relatives of the victims and anyone that was involved.
Yep, okay. If you're watching for the first time, we go through a number of slides. We're here at 1 o'clock every Monday and every Friday. Let's kick off with the first slide. Data released over the European session. What's caught your attention this morning?
Okay, well, the first data I was really out of Japan yesterday, in fact, but GDP numbers for Q3, and the key here was that the Japanese economy has shrunk for a second quarter in a row. If the size of the GDP fell by 0.8%, as I say, two negative numbers or two reductions in GDP in a row constitutes a technical recession. So Japan finds itself back in just that situation.
Yep.
Then coming over to Europe, some slightly better news as far as inflation and economic growth was concerned. For the Eurozone, we had several measures of inflation out today for October. We look here at core CPI, Consumer Price Index, and here the year-on-year level, and actually it came in modestly ahead of forecast, so it came in at plus 1.1%. Forecast was for plus 1% even. So I suppose the ECB can look reasonably.
Pat themselves on the back.
Well, they are, but I must say I am increasingly sceptical of some of this data because I don't see where these price rises are coming from. If you look around at individual countries, inflation reads, maybe, I'm not saying they don't stack up, but it's hard to see where exactly the data is coming from.
Understood.
And then in terms of the UK, we had the Rightmove House Price Index for November. The data was mixed. House prices fell 1.3% on average over the course of November on a month-on-month standalone basis, but if you look at the year-on-year number, then they rose 6.2% across the country. So I know that there's been talk of sharp drops in prices for the very biggest and best of London properties. Maybe that's reflected in that slight dip there, but for the country as a whole, prices are still moving in the right direction at a decent click.
Understood. The week ahead?
Okay, quite a bit of European data out starting tomorrow with trade balance for Italy, followed by UK PPI, Producer Price Index, and Consumer Price Index data for October, so more inflation data, which obviously the Bank of England and interest rate watchers will be paying close attention to. Then we also have the ZEW surveys for both Germany and the Eurozone, so we'll be looking at current conditions and economic sentiment for both of those economies. Thursday, back to the UK for retail sales for October, and quite an important day as far as Asian markets are concerned, because on Thursday we've also got the Bank of Japan's interest rate decision.
Understood. Okay, let's move on to the European movers. Two you selected this morning.
Yeah, well, obviously events in Paris have dominated, but the events with things over the weekend and they're still being felt in the markets this morning. So we look at two stocks whose prices moved because of what happened in Paris. So first of all, Accor, which is ticker AC in France, trading around €39.26, down about 5.3%. The French hotel group stock has fallen in response to the attacks in Paris on Friday, and clearly that's because there are fears about how tourism travel will be affected, and the likelihood is it will be severely dented. Although I did read some stats today suggesting that surprisingly Paris is actually more of a business destination than a tourist one, which would surprise me. And then that, in which case maybe the fall won't be quite so bad as it could have been if it was pure tourism. But staying with that theme, Group Eurotunnel, which is ticker GET in Paris, €11.71, down by just under 5%, and their shares have fallen on the expectations of reduced traffic, much tighter security, and of course possible border controls now being implemented within Europe to make travel that much harder.
Okay, let's take a look at M&A, rumours and movers this morning.
Right, well, we stayed with railways, but on a slightly happier note. US railway company Canadian Pacific, ticker CP, in the States has approached its rival Norfolk and Southern, which is ticker NSC, about a possible merger, but the early indications are that they received a call reception. NSC shares largely unchanged at $89.50 pre-market, and Canpac completely unchanged at $135.99. Just to give this idea some context, we did talk about a possible merger with Canpac and CSX earlier in the summer, but that got scrapped. But a combined merger of Canpac and Norfolk Southern would be worth around $47 billion, so a substantial company, and it would have a rail network that stretched from the Canadian west coast to the Gulf of Mexico in the south and the Atlantic coast of the USA. So it would span a big chunk of probably 2/3 of the US. Just to sort of put some context into how these stocks have performed, Norfolk and Southern, prior to the approach, was trading at 33% below its 52-week high, which was 117.64. So, Norfolk and Southern shareholders will be, I'm sorry, interested, but the management, as we see, probably said no. The CEOs of both companies met informally on Friday, and the boss of Canpac, Hunter Harrison, suggested various scenarios, including mergers or other partnerships, or forms of partnership to his peer at NSC. It was James Squires, but he was, as I say, said to be pretty cool and standoffish proposals. Okay. It's interesting to note that the activist hedge fund manager Bill Ackman of Pershing Square sits on the Canadian Pacific board, and he may well be behind the moves to expand the company through acquisition. As I said at the top there, this is the second deal that Canpac has tried to broker in the last year. I doubt it's dead in the water completely, and this is really all about moving freight in a growing US economy. It's not a passenger business at all in the States, the railway. It's all about freight. And as you know, Warren Buffett's heavily invested in the sector as well. So watch this space, because I'm sure there'll be further developments. Understood.
Let's take a look at US data points to keep an eye on.
Well, there's absolutely no US data of any note today whatsoever, but there is a very important meeting going on in Turkey. The G20 meets there today, and obviously plenty of meetings between heads of state trying to discuss what to do about Syria, what to do about the attacks in Europe. More news flow to come out of there, I'm sure. And then in terms of outright economic data, we have US consumer price inflation tomorrow on Tuesday, alongside the industrial production numbers as well, so two key numbers to watch there. Housing starts on Wednesday, one of our weekly numbers. The FOMC minutes also released on Wednesday. It would be surprising if there were any shocks or new developments in that. I think the Fed governors have signalled their thoughts and intentions, but nonetheless, I'm sure the market will pore over those. And then the Philly Fed out on Thursday, another survey data, but data rich this one, and these are the kind of data points that economists like to pore over to get clues about how the economies are performing.
Understood. Let's take a look at US pre-market movers and some chart points.
Okay, so we'll start with Ericsson. That's ticker ERIC, or ERIC in the US, €9.30, up around 0.59% pre-market. Sorry, that should say $9.30, up about 0.59%. The Swedish networking company shares spiked 9% on Friday as rumours of a merger with Cisco did the rounds. Ericsson has since denied the story. Remember, Cisco and Ericsson have formed a working relationship, a partnership, if you will, in the last week or so. But now some people are hinting that there might be closer ties. Cisco had disappointing earnings at the end of last week as well. Could be 2 and 2 being put together and come out with 5, but we shall see.
That's the way the markets work.
It is, absolutely.
And
Mylan, the drug sector story continues to rumble on here, the idea of consolidation, but this is a deal that's not going to go through. Mylan, $48.78, up 12.9% as of the close of Friday, and the generic drugs maker shares have risen very sharply as their bid to acquire the rival company Perrigo has failed, and much to the relief of investors. Now, I don't think anybody really wanted that deal to go through. Less than 50% of the Perrigo stock was tendered for the Mylan offer, and I think both parties, or at least the shareholders of both parties, will be pleased to walk away. But it doesn't mean that there won't be other deals in the offing, though, in that sector. And in terms of cash levels to watch today in indices, European markets have been subdued, so no real change from Friday. The FTSE, we're playing 6,100 on the downside against 6,180 to the upside. For choice, probably the FTSE has been the best performing market today across Europe. In the DAX, 10,700 now on the downside, plays 10,765. US markets sold off quite sharply on Friday. They they opened at their highs and sold off from there. So for the Dow now, we look at 2018 on the Dow, sorry, the S&P rather, we look at 2018 on the downside, plays 2044 to the upside. And for the Dow, which had a very sharp fall itself, 17,240 now is our new downside target to watch, and 17,350 to the upside. Currency, well, not too much movement, surprisingly perhaps, but the euro dollar, 107.10 to the downside, plays 107.60 to the upside. Aussie dollar, US dollar, 71.25, plays 71.55, so we've been able to tighten that range up slightly, though it has moved a teeny bit lower. Dollar yen unmoved, pretty impassive really on that weak GDP data. 122.60 now on the downside, plays 123.10 to the upside, and cable holding its own. 151.78 is our downside level, 152.30 to the upside, so we've probably just edged a little bit higher against the dollar. But dollar strength seems to be persisting really, or at least the dollar seems to be happy to stay in a relative position of relative strength for the moment.
Understood. Let's wrap up with our last slide, in focus.
Right, so with the Bank of Japan meeting on Thursday to decide on what its next move in interest rates is and whether it will increase or amend its current QE plans, I think it'd be quite interesting to have a look at the situation there. So what would the Bank of Japan's next move be as the country moves back to recession for the second time in 2 years? Its QE expansion in 2014, which you remember was substantial, that came at the end of October, has had little obvious effect on the overall economy. Though exports have grown, the growth has been patchy, and even core inflation in the country has slipped back to negative rates in 2015. Now, the chart shows us here the Bank of Japan's balance sheet, the size of that balance sheet in the blue line versus Japan's GDP growth rate. And as you can see, that the balance sheet of the Bank of Japan is massively inflated and points up at a sharper than 45-degree angle there over the lifetime of most of the lifetime of this chart, whilst GDP has basically been trending lower since late 2011, early 2012, and has taken a turn for the worse in recent times as well. And as we said at the top of the programme, has dipped back into recession. So the inference from that is that just printing money and buying government bonds back is not helping the economy, and what we really need to see, and then the Bank of Japan really has reached the limits of what monetary policy can achieve, and so we now need to see some fiscal initiatives from politicians if they're going to succeed in reviving the economy. We'll see if they can do that, but I think what the most likely outcome is that the bank does some more printing and the politicians sit pat, but we shall see.
Okay, Darren Sinden, market commentator, Admiral Markets, thank you very much for that. That wraps up the Wall Street Crossover Show. We'll be back at 1 p.m. next Friday. Have a good day. Thank you.